What's up, guys? I'm back. I know it's been a little minute. Appreciate all the support from all my viewers, everybody that's liking the video, subscribing to the channel. Very blessed, very appreciative of everybody. Plans to grow the channel have definitely been derailed a bit in the past by all the chaos caused by the COVID and whatnot. But we're back and hopefully better than ever. First topic I want to cover for you guys now that we're recording again from the brand new studio is the economic calendar. It's currently Sunday, and one of the things I like to do at the beginning of my week before I actually start trading is take a look at the economic calendar for the week to see what kind of obstacles may be in the way or what kind of economic events I may be able to leverage in my favor. Now, if you watched the fundamental analysis video I put together, I did briefly describe how to use an economic calendar, what it's all about, but today we're going to go into detail. So first of all, there are multiple websites, probably hundreds of websites you could use in order to take a look at the economic calendar, but it's basically some of the most important economic events that happen around the world that affect the different currencies around the world. And of course, as a Forex trader, trading foreign currency pairs, this is what you want to be tuned into because the technical analysis you're looking at on the charts, or the candlesticks, indicators, uh, patterns, and whatnot, this is what's going to drive that data. So your economic data actually dictates what happens on the charts, which just kind of leaves a paper trail of what the relationship was between each currency. So when you take a look at the calendar here, it's going to be broken down by day, broken down by time, broken down by which specific currency the news event is for. It's going to be a title. It's going to let you know what that news event is. It's going to let you know a category of impact as far as whether that's going to be low impact on the currency, medium, or high. And then if there are statistics, you're going to get them over here on the right hand side. Always listed first is going to be what happened last. So you get your previous statistics. In the middle, you get the consensus, which is what professionals are predicting to happen, what they think will most likely happen. And then once the news actually takes place on this date at that time, the actual column will populate and we'll find out what actually takes place or was actually reported with the news. So what to pay attention to? Number one, you have to get familiar with these news events because even if they all say high, if they all say medium, different news events impact the market different ways for different amounts of time with different volatility. So as you become seasoned in your trading career, you're going to get familiar with particular events that repeat themselves and how they may particularly affect the market. But what you need to know most importantly is whether this is good news or bad news. Good news would be your GDP, gross domestic product, your interest rates, existing home sales, things that pretty much are self-explanatory, are going to be stimulators for the economy. Bad news would be something like unemployment rate. So with good news, you want your good news to be high and you want it to be better than expected. Hopefully better than last time as well, but generally better than expected is going to give you good results for that currency. So for good news, just keep that in mind. If results are better than expected, it's going to boost that currency. If it's bad news like unemployment and results are higher than expected, that's actually going to hurt the currency or weaken the strength of that currency versus whatever the other currency in the pair is. And we're going to do a quick illustration example over there on the whiteboard That way, hopefully, it really brings it home for you guys if you're struggling to understand how this affects the price movement. But what you want to do is take a look at the calendar for the entire week on Sunday, or what I like to do anyway. Anything that's going to affect pairs that I like to trade, like for instance GBP, JPY, Great Britain pound versus the Japanese yen, I'm going to be zooming in on any events that affect the United Kingdom or affect the Japanese yen. So anytime I see an event like this, especially high priority, I'm going to take note of that. I might even set a calendar alert in my calendar. That way, if I forget about it and I do happen to have trades open or plan on making trades that day, once I get close, I'll know that I need to pay attention to what's going to happen with this news event, or possibly just avoid trading altogether whatsoever. Some of the most notable events, though, we've already mentioned interest rates and GDP. Non-farm payrolls, which affects the US dollar, happens the first Friday of every month. So it being the coming up on the 21st of December, we definitely already had non-farm payrolls, but January, first Friday of January, be aware of non-farm payrolls. You either want to be prepared to leverage a really good trade that morning, or you want to avoid the market altogether because it can be very, very volatile. So with all of that being said, another great website, we were looking at my FX book here. You can also use Forex Factory, which gives you all the same information. Sometimes you'll see different news events tracked back and forth between the websites, but they're both pretty accurate, pretty consistent. Over here, the impact category is just color coded rather than labeled low, high, or a medium. The medium impact is going to be orange, low is going to be yellow, and high would be, actually, high impact is orange, low impact is yellow, and no, non-economic is, see, this website is weird. I like my FX book better. But you just want to make sure you understand the color code. I'm pretty sure the high impact folders are red. It just doesn't have any listed here at the moment, which is also weird because you see we have plenty of high impact news on my FX book. Just make sure you're aware of which economic website you're using and making sure you're not getting confused or tracking the wrong events. And now we're going to come over here to the whiteboard. I'm going to show you exactly what I mean as far as good and bad news affecting the exchange rate. So a quick illustration of how sentimental analysis would work for Euro USD, or any pair for that matter. Every pair, you have your primary currency that's listed first or on the left hand side, and you have your secondary currency that's listed on the right. So for Euro USD, you could consider the euro in the driver's seat. Anything that happens to the euro is going to affect the exchange price for this pair clockwise. So when the euro is doing good, it pushes the price of Euro USD up. When the euro is doing bad, it pushes the price of Euro USD down. Now completely vice versa, or counterclockwise, USD being the secondary currency, if USD is doing well, it's going to push the price of the exchange rate down. Complete opposite. If USD is doing bad, it's actually going to push the exchange price upward. So understanding that, when we talk about economic data or news on the economic calendar, you're gonna have good news and you're gonna have bad news. Your good news consists of interest rates, GDP, gross domestic product, usually things that are tied to services or products. And then your bad news gonna be things like unemployment, ECT. When good news is higher than expected, it has a positive effect on the currency. When bad news is higher than expected, it's gonna have a bad effect on the currency. So you want bad news to be low and you want good news to be high. Hopefully that makes sense. So let's just take a look at a couple of examples here. Let's say news comes in for our primary currency being the euro. Let's say interest rates were expected to be 0.5, but they come in and they're actually 1.0. Better than expected. That's gonna cause the euro to do well or be strong, which in turn could cause the relationship to shift and balance towards the euro, pushing the exchange price upward or creating new highs. Just the opposite, let's say interest rates were expected to be 1.0 and then they came in at 0.5, lower than expected, which could cause the euro to lose strength, shifting the balance towards the secondary currency or USD in this pair, which could actually push the exchange rate down because the primary currency got bad news. And just to take a look at the other example, let's say unemployment rates were expected to be 1%, and then they come in and they're actually 2.5%. Higher than expected for bad news is going to weaken the primary currency, the euro, which could actually push the exchange rate down. Now, if these unemployment rates were expected to be 1%, and then they come in lower than expected at 0.5%, it being bad news, lower than expected actually benefits the euro, strengthens the euro, could potentially push the price upward. So I hope this video was helpful for you guys. If you enjoyed the video, please hit the like button and make sure to subscribe so you get notified every time I upload a new video. I'll be uploading a lot of new videos coming up from the studio. I am keeping track of all the requests in the comments. So if you have a video you'd like to see or you have a question on this video, make sure you leave a comment below. I always get to the comments. Once again, I appreciate you guys, and I'll see you next time.